QuickBooks Online 2026, creating and analyzing budget reports. What are budget reports? Are they similar to other reports? Are they under the purview of the general accounting system? Well, get ready and some coffee because we get things done on schedule with QuickBooks Online 2026. Searching for the free QuickBooks Online sample company file as we do every time, simply typing into our favorite browser, QuickBooks Online Test Drive. Looking for that result that has Intuit.com in the URL, Intuit being the owner of QuickBooks. And then, of course, we're going to have to somehow get you past the CAPTCHA, Ara, verifying that you're not a robot.
Hold on. Gotta prove I'm not a robot. Leans in close. I'm organic. I make tiny rounding errors. Achoo! I even sneeze. All right, we're good. Now click that top result. QuickBooks.intuit.com.
All right, we're in. Right-click it on the favorites to open the balance sheet report. Right-click it on that profit and loss to open a link in a new tab for that profit and loss report, as we do every time. I think they let Ara in because she sneezed on him, and then they were thinking, oh, she's got a cold or something, so we better just try to get her away from us. But whatever, we're in. Let's go ahead and then change the dates up top to the standard range, 010125 tab, 123125 tab, and then we're going to go to the right into the profit and loss. She's just like a real human. She didn't cover her mouth when she sneezed. I knew. See, that's how they knew. 010125 123125. You sneezed right on my lunch, Ara, for crying out loud. Okay, that's the setup process we do every time. Now, in prior presentations, we've been looking at the reports. These are the major two financial statement reports. And I've been saying there's a couple major categories of reports, of which the budgets do not exactly fall within. Now, we're not going to get into detail about creating the budgets at this point in time, but instead just kind of understand them as the report, how they fit into the accounting system, and we'll have a whole nother course or section on budgets themselves. But first, again, you really need to know where they fit in the standard accounting cycle and how they line up to other reports. So from a report standpoint, we've got the balance sheet, which is as of a point in time, and then the income statement, which has a time frame, a beginning and ending system. So that's one way that you can try to identify reports. Is it a point in time or a range of time? If we go back to the balance sheet, we can also say what we have like detailed type reports. Those would be things like drilling down in a particular account where we have the transactions broken out typically by date. So that even though we have a balance sheet account report, meaning an asset account, cash, then it's still like a timing report in this case because we're looking at the detail to get to that ending balance of cash, which is reported on the balance sheet as of a point in time. So we have point in time reports, we have timing reports, we have the major financial statement reports, balance sheet, income statement, and then we have the supporting subsidiary reports, which are typically breaking out the detail in some way other than simply by date, as with a GL report or transaction detail, like accounts receivable being broken out by customer, accounts payable being broken out by vendor. Now, we talked about one other kind of report that's kind of outside the system thus far, that being a internal control type report. And that would be the report when we did the bank reconciliation. Why? Because the bank reconciliation is not being constructed as we build the financial statements. We actually build the financial statements and then verify the financial statements to the bank statements, which is an internal control. That's why it's a little bit different. It's not giving more information about a particular account as we construct it, but rather verifying the accounts and internal control, giving more confidence that we did not miss anything as we constructed the financial statements. The statement of cash flows, by the way, also was a little bit different as well, because we don't really think of it as being constructed as we do the debits and credits so much as basically we create the balance sheet and then the income statement, and then we back into the cash flow statement from those reports to get there. So this time we're looking at budget reports. Now they sound like reports, so you would think that they're going to be similar to the other reports, but I want to point out that the budget reports are different. So if you're in the accounting department, you may be on, whether that be in a business or whether that be working for a client or whether that be in a CPA firm, you might be involved in the budget report process. However, it's not part of the standard accounting process. The reason you would possibly be involved is because the budgets will be in the format of financial statements. So it's useful to know the formats of financial statements, possibly even debits and credits, in order to construct the budget. But why isn't it part of the normal accounting cycle or system? Because the normal accounting cycle or system is the construction of the financial statements. So remember the typical goal of the business. What we're doing on the bookkeeping side is, number one, creating the end product, balance sheet and the income statement, at least in the United States, for end results of creating the tax return. And number two, communicating financial transactions as smoothly as possible with those who we do business with, customers, vendors, and employees. As we do that, we build our financial statements with the journal entries, but rather than entering the journal entries as raw data like you do in a textbook, we use the data input forms, invoices, receipt payment, expense forms, bill forms, which behind the scenes create the journal entries, which make the financial statements. As making the financial statements, also making subsidiary reports, accounts receivable subsidiary ledger, accounts payable subsidiary ledger, revenue by customer, revenue by product, and so on and so forth. So that's what we typically do. What is not happening here is us making future data, which is of course what a budget is doing. The budget is then saying, how can I take what has happened in the past and project out into the future? It's similar to thinking about stock prices, for example, looking at what has happened in the past and then trying to predict what's going to happen in the future. That is outside the normal accounting process, because the normal accounting process is to gather the data, which then can be used for tax returns and for basically populating into future data. So the financial statements are there to build trust with external users, the bank if we want a loan, investors if we want to issue stocks or something like that, and to create our tax returns in the United States to pay the federal income tax appropriately and properly. And then we can use that data that we have compiled to then project out into the future. Now, the reason that's not just the purview of the accounting department is because the accounting department is not in the business of really saying what the business needs to do in order to improve in the future. We're in the business of gathering the data so that the decision makers can then use that data to help figure out. So we're usually in the room then, we're helping out and saying, hey, look, this is what the data means. And we might be involved, of course, in future decision makings, particularly if we're doing the books for our business, or if we're, but if we're on the team in like an accounting department, then again, we're going to be in our major task as the accountant is going to be making sure that the data is compiled, being read properly, so that we as a team then could make the decisions, and the decisions are going to be made by the owners, right? So that's the thing that's going to basically be different. So that means that like we still have to kind of be involved in creating the financial statements because they will be in the format of balance sheet and income statement. But we need other people on the team to say, okay, what are we going to do differently? All right, so let's further break that down. There's different levels and degrees of complication that we could have in our future budgets. If we're going to say this is where we stand as of a point in time, the balance sheet, which is assets equal liabilities plus equity, the net equity is assets minus liabilities equals equity, which, like in a home, is kind of like the amount that is allocated to you, the owner, that's not allocated to the bank, or in this case, to liabilities. Then the income statement is telling us performance, meaning what has happened in, say, for example, the last year, to help get the equity, assets minus liabilities, the book value of the company, where it is at this point in time. We can think of it as an analogy of a car that's driving miles. It's always going up until we reset the odometer. Let's imagine that as we drive miles, we get paid a fixed amount of dollars. And we have expenses that always go up in the expense direction. The gas, for example, in the car. And we can convert that to dollars. Dollars spent on gas for the car, money received for miles driven. Revenue minus expenses is going to be the net income. That's going to be the net increase in the equity over a certain time frame, in this case, a year. So that means that this profit and loss is the performance statement. So when we're looking at a budget, we're usually thinking about performance. So we're trying to say, how did we do last year? What's the likelihood that we're going to do good in the following year, which of course is the profit and loss statement. So the most basic type of profit might simply even ignore the balance sheet and basically just go to the profit and loss and try to say, how can I maximize my net income on the profit and loss? How do you do that? Well, you want to increase revenue and you want to decrease expenses. However, oftentimes you're going to have to increase expenses to try to increase revenue, but hopefully at a rate that is higher than the increased expenses, which is always going to be, of course, the argument for the marketing team. They're always going to say, hey, look, if you give us more money for advertising, we're going to put some commercial of some crazy people dancing to the modern audience, and somehow that will actually generate 10 times as much money. Be careful of that line of reasoning. It seems to have backfired a few times in recent history, but that's the argument. So basically what we're going to end up doing is saying, hey, look, as the accountant, this is what we have thus far. I could make a standard budget and just assume that we're going to make the same amount next year. And if we did make the same amount next year, this is where we're going to be. But if we're really getting into the budgeting process, we want to get more detailed and say, okay, what changes are we going to make next year so that we can hopefully positively have a positive trend in our income going forward? How can we cut expenses or possibly spend our money in more efficient ways that will maximize our goal as a business, which is revenue generation? The more revenue that we generate, hopefully because we're in a virtuous business, selling toasters. People need their toast. We're selling our toasters. The more toasters we sell, the more happy the universe will be. And that means that we should make more revenue. The more revenue we make, the happier we're making the world. And so we want to make the world happier by increasing revenue and decreasing the expenses. That means we're doing a good job unless we're cheating somehow. And so that's going to be the idea. And to do that, of course, we need more than just the accounting department. If you have a team of more than just one person, right? You need the managers need to be involved. The decision makers need to be involved in that. The owners, the CEO, and so on. So that's going to be the idea. So we give the information, and then we make the decision on what the changes are going to be, and then we could take those changes and then populate that information into the profit and loss report. Now, that's typically going to be a profit and loss on the most basic level. But if we make a profit and loss report, then we could say, where will that end us at the end of the period? Meaning I might make a profit and loss report for a 12-month time frame, monthly profit and loss report, which means at the end of each month or each quarter, or at least at the end of the year, I could take that and say, well, that is going to put us where in terms of the balance sheet? Meaning, at the most basic level, if next year I made another net income $1,642, then our equity, you would think, would be going up by that amount, right? However, that's a little too simplified because, of course, there's a lot of other things that could be going on basically within the balance sheet, because we might be taking loans out, we might be buying equipment, property, plant, and equipment, and we often want a budget not for just the net equity or balance sheet, but also a budget specific to the cash flow, because cash flow is often a restraint within many businesses. So you can get quite detailed on the level of budget. Making the budget for the balance sheet is actually a little bit more complex because, again, you're projecting where you're going to be after thinking about what your performance is going to end up being after you think about the expenses. So again, the budget's a little bit above and beyond. Now, as a bookkeeper, that you want to be clear with that, because again, you don't want to have job creep come in and have the expectations be, well, you're not doing your budgeting thing. It's like, well, no, that's not normally my job as a bookkeeper or an accountant. It's to make the financial information. You have to be involved in the budgeting process, and that's usually a whole nother different thing. We don't make the budget as we create it, but we could make a standard budget. Like I could just take last year's numbers and then project it out, divide by 12, right? And just have a standard budget that would be mapped out. But if you do that, you just want to be clear that all I'm doing is taking last year's numbers and mapping them out. Now, one other thing on QuickBooks, notice that it's a little bit, what QuickBooks is good at on the budget is making a budget versus actual comparison as time passes. So what it's not great at really is making the budget within QuickBooks. That's not really what QuickBooks is designed for. So what you'd want to do, and what we will do in a future course or section, is take the prior data, export it to Excel, and then make the budget from Excel, and depending on how complex we want to get within Excel. And then once we do that, then we do the data input back into QuickBooks of the finished budget. Why? Because then QuickBooks, as time passes, will allow us to easily run reports, giving us what we estimated by budget versus what actually happened. Budget versus actual. That's where QuickBooks shines, because it allows us to then make those comparisons. So really, the QuickBooks is not the software where really, if you're making a detailed budget, that you're going to really work things out in QuickBooks. You're going to use the data from the past in QuickBooks to export to Excel or some other software to then really pound out and think through the budget, and then data input it back into QuickBooks so that QuickBooks can generate reports as time actually passes through the budget period that you budgeted for, so that you can make comparative analysis, budget versus actual. All right, so that said, let's go back to the first tab. And if I was in the reports, it used to be that they have the budget reports in here, and I can type in here like budget. They moved them around a bit. But obviously the budgets reports aren't populated if you haven't made a budget, because you don't have any budget reports. So typically within the budget, if we want to create the budget, we could go to the cog up top and then go to the budgeting under tools. And so that's going to give us our center. So now we have plan better with budgets, and it says manage all your profit and loss balance sheet budgets in one place, meaning we could make more than one budget, right? Because it could be possible that we have different kind of ideas. We might have gone crazy thinking about all the different possibilities depending on what happens in the future to create the budget. So we could have multiple budget. Use the latest data available in QuickBooks to make budgets. See if you're on track by comparing actual performance with budgeted numbers. Bring in profit and loss budget created elsewhere into QuickBooks. So we could import the budget here, or we can create the budget from scratch. So I'm going to basically take a look at creating it from scratch, and we have how do you want to set up your budget. So we have the budget types. We have a profit and loss or a balance sheet. Now, historically, QuickBooks has always had like the ability to make a profit and loss budget and then run the budget versus actual. They have had less success, or they've been developing their balance sheet side of the budget. So in other words, once we export it to Excel and figure out the budget for the profit and loss, we can upload it back into QuickBooks, and that typically works great. However, we can also figure out the balance sheet and put that into the system, which still sometimes it's not quite as good at the balance sheet, although it's improving. We'll take a look at the improvements, hopefully in a future course or section when we get into more detail on the budget. But once again, the profit and loss is the default. So the period. So we have the future for 2026. So typically you want to make the budget, if it was the end of last year, you're going to make the budget for, next year. So if it was the end of 2025, we would then be making the budget for 2026. So budget format, consolidated. So create an org level financial plan, subdivision, create individual budgets based on location. So I'm going to keep it at the consolidated, meaning business-wide. If it was a small business, that's what you would do. If you had subdivisions for locations or class or department, meaning typically larger businesses might have that, then you could go to the subdivide. Prefill. So do we want to prefill actual year-to-date numbers in 2026? So it could take those numbers and populate it. Or we take the actuals for 2025. That's possibly the most common. In other words, if I'm trying to make a budget for 2026, if you just want to make a standard budget, what would be the thing that you would do? If you didn't have any other information, you're just the bookkeeper, you'd possibly take the profit and loss for 2025 and then just divide all the lines by 12, giving you an average performance per account on the performance statement, profit and loss, and that would be your starting point of the budget. In other words, the budget would basically look like as though I hit the drop down for periods and I want to see the periods by month. Where is it? Here. Select the period. No. Where is it? Here it is. I was getting confused because it has customer and employee. I want it months. All right. So this is still 2025, and there was nothing that happened in January, but this would be the baseline for 2026, right? This would be your starting point. You just say, okay, I'll take the 2025 numbers and I'll divide them by 12, and I could evenly allocate them, or I can take the actual numbers for 2025 and then estimate that's going to happen in 2026. Now, there's pros and cons to either of those methods, because if I looked at the actual numbers and I projected that out for 2026, in this case, it wouldn't make much sense if the business started in July, right? That doesn't make any sense because I wasn't in business in January. You would think January would make more revenue next year since I wasn't in business last year in January. So in that case, it would make more sense maybe to take, the last 6 months and then divide that by 6 or something like that. You could also take the total, right? You could take the total for the year and divide it by 12 for each line item. And so again, if you had a whole year's worth of data and you had a type of business that was pretty even throughout the year, that could make sense, at least as a starting point. However, some businesses are seasonal, so it wouldn't make sense if you make all your money like around Christmas or something like that. Then you would want to take account for the seasonal changes. So, and then of course, that's just the baseline, whatever that baseline is, because next year you're going to think hopefully that things are going to improve because you might be making changes to your advertising or whatever you're doing. So if I go to the balance sheet, we might use actual for 2025, actual setup options, custom budget. We could import. I'm going to say next, and it's preparing your budget. So here we have the information. So this is what the budget preparation kind of looks like. So now we have the actual numbers. This is the entire year of 2025. The budgeted numbers are the same because it budgeted out the same numbers. And then again, we can see over on the right that 2025 only had numbers in it for the last few quarters. So it pulled that in exactly from 2000. Now that might be a starting point that you could use to populate the budget, but it's probably not exactly what you'd want to do, because if this was all you did, then you wouldn't really need to make a budget, right? Because you could go to the profit and loss and make a comparative report for 2026 compared to 2025. So the reason you want a budget is because your numbers are going to be different than last year, so that you can then compare actual performance to what you planned to do, in the future. But this could be like a starting point to figure out the budget. So we've got the period, we've got the compare reference data, the actual data for 2025. It could be a yearly format, quarterly format. If you just want to do a more simplified budget by quarter instead of by month. By month is kind of the traditional format for the budget. Batch actions, find by account number, show all reference data, and so on. So we'll go into this in a lot more detail in a future course or section, but that's how you, in essence, make the budget. We can then save and close the budget. And notice it's also over here in the reports now under financial planning and budgets. So reports, financial planning, and budgets. So now we have it. So we can then run the budget versus actual. If we hit the drop down, run budget, overview report. So I'm going to, I can't open that in a new tab. So I'll do budget versus actual. It won't let me open it in a new tab. So we'll just open it here, I guess. It's annoying. So then it should generate the budget. It still opened it in a new tab. That's nice. There. So let's go from 01/01/26 to 12/31/26 and look at our budget. So now we have the what actually happened. Nothing has actually happened in 2026. Here's what was budgeted to happen in 2026. And now we have the over budget by. So we have the comparison. Now, again, if I just created a normal budget, the budget overview, it would just give us the budgeted numbers. But as time passes, this is the kind of report that you'd like to see typically. And so let's see this one by month. I can break it out by month up top. They've made this a little bit better because now I can break it out by month or by year, which is nice. So now each month has that breakout, giving us then November actual numbers versus budgeted numbers. We have the over budget by, and then the percentage. So that's nice. I can also see that then by quarter. So this report, great. It's great at basically doing the comparative budget report. And that's, as a bookkeeper, usually would be an accountant or whatever you're doing, CPA firm, that's usually above and beyond what you're normally doing. If you work as a bookkeeper, budgets aren't typically under your normal billing cycle because, again, you have to work with the client to prepare the budget. So you might be involved in that, but that's typically a different kind of exercise than compiling the data. If you work in a corporation in the accounting department, then it's quite likely that you could be involved in the budgeting process because you're going to have to verify the data that they're basing the starting budget on. Think about what kind of changes they're going to make. So if they say, look, we're going to spend money on some crazy ad that has nothing to do with the product that we're selling, but we're trying to get the new modern audience and it's going to have revenue like triple or something, you could roll your eyes and say, dude, you're crazy. I don't know what but we will run the numbers on it. And if your projection is right, if that actually happened, we can run the numbers, right? They can give us their crazy proposals and we try not to cringe too much. And we just be like, okay, I'll run the numbers on that. If that's what you say is going to happen, I will, I'll map it out at least. I don't know. No one's asking my opinion, apparently, on whether the validity of that type of action. I just run the numbers. So we run the numbers. If you're in the CPA firm or an accounting firm, similarly, you're going to be asked possibly to do projections in taxes and whatnot, and then projections in basically revenue could help. But again, that's not part of the standard process. You're there to make the financials, there to do the audited financial statements, verifying that the numbers are right so that the management can help generate the numbers. Although, again, they might, help with your advice. There's a little kind of interplay if you do audits and stuff in a public accounting firm, how much advice you can give on future performance, because again, that kind of makes you less separated from the managerial decision making, right? So, but if you're just a tax preparer or something, I don't know. I'm just saying it's not part. No matter where you are, the budget isn't just part of the normal accounting process. However, they need the numbers to make the budget, and they might need you to help to generate the budget after they make their wild predictions.